What does it do? Individuals and small businesses can use Intuit software to handle their money, from paying taxes to bookkeeping to payroll management. Intuit Incorporated is a company that sells business and financial management software. Small business and self-employed, consumer, and strategic partner are the segments through which it works. QuickBooks Financial and Company Management online services and desktop software, payroll solutions, payment processing solutions, and finance for small businesses are all available within the small business and self-employed category. Do-it-yourself and assisted TurboTax income tax preparation goods and services are included in the consumer section. Professional tax offerings, such as Law Charity, Pro Series, Profile, and Pro Connect Tax Online among professional accountants, are included in the strategic partners sector. Scott D. Cook and Thomas A. Proul formed the company in March 1983, and it is based in Mountain View, California. Intuit's official name is Intuit Incorporated Common Stock. Why you should purchase. QuickBooks and TurboTax, Intuit's key businesses, are doing well, increasing moderately and generating a lot of cash. The corporation is launching a second act by focusing on 5 big bets using artificial intelligence, AI. The inclusion of Credit Karma is giving these risky bets a boost. Data points. Mountain View, California, is the company's headquarters. Intuit Investor Relations has a website. $149 billion in market capitalization. $4.1 billion in cash versus $2.0 billion in debt. Revenue, $6.8 billion, $7.7 billion, $8.9 billion, 2019/2020/TTM. $1.6 billion, $1.8 billion, $2.1 billion in earnings, 2019/2020/TTM. Data current as of August 16, 2021. That's where this week's recommendation, Intuit, NASDAQ, Into, comes into play. The cloud-based tech giant behind QuickBooks and TurboTax simplified accounting and tax preparation and was last recommended by Stock Advisor 9 years ago. Today, we're going back for another helping because a second act is shaping up. We believe it has the potential to create solid returns for shareholders. The big picture opportunity. Before discussing that second act, though, let's review the business segments through which the company makes money. Small business and self-employed, Intuit offers QuickBooks accounting software, as well as tools to streamline payroll, payment processing, and financing. Consumer, this includes TurboTax software for completing taxes, plus Mint.com, which helps users track their personal finances. Pro Connect, a suite of online tax offerings that helps professional accountants do their jobs. Credit Karma, the site offers personalized recommendations on everything from loans to insurance to checking accounts. It receives referral revenue from the products it suggests. When we break down where the revenue is coming from, it becomes very clear that the core, QuickBooks and TurboTax, still drives the lion's share of the business, see table below. The consumer segment will soon look even stronger, as the COVID-induced tax filing delay pushed much of this revenue into the fourth quarter. Regardless, these two products have flexed their muscles for years. Being cloud-based, they both have high margins. And because the data you input lives on Intuit's cloud servers, the moat surrounding the company via high switching costs is formidable. Why we're excited about Intuit. Under the guidance of CEO Sasan Goodarzi, Intuit has embarked on what it considers to be the next wave of innovation, using artificial intelligence to power prosperity around the world. To that end, management has identified 5 bold bets for the future. Revolutionize speed to benefit, get money into customers' pockets quickly. Connect people to experts, TurboTax Live customers can talk with tax experts live via video. Unlock smart money decisions, sites like Turbo and Credit Karma help reduce debt and increase access to helpful financial products. Be the center of small business growth, QuickBooks customers can access cash and inventory management tools to increase their success odds. Disrupt the small business mid-market. Once companies reach a certain size, the standard QuickBooks is no longer helpful. QuickBooks Online Advanced was built to serve larger customers. Of these, we believe 2 have true game-changing potential. The first is unlock smart money decisions. Goodarzi sees Credit Karma as a platform that can support several future monetization verticals. That's exciting because the base is so huge. Credit Karma has 100 million members. This is the most likely candidate to keep Intuit on the same growth trajectory it's enjoyed in recent years. The second unheralded opportunity is disrupt the small business mid-market. In this arena of mid-sized companies, accounting departments typically have to overspend on software because there have traditionally been great options between basic accounting packages and those offered by big enterprise vendors. Intuit seems to be doing very well with its initial push into the space with a just right offering for growing companies. Competition might be an issue in the future, but Intuit has some brand advantages it can push for now. Why now? When you add all of these growth levers together and consider the potential for international expansion, management believes there's a $248 billion opportunity. With trailing sales of roughly $9 billion, Intuit has captured less than 4% of that opportunity. The company has generated $2.9 billion in free cash flow over the past year and has more than $2 billion net cash. Such flexibility allows Intuit to invest in these bold bets freely. Those dynamics explain why we don't mind recommending a stock trading for nearly 70 times earnings and 50 times free cash flow. Potential business risks. TurboTax and QuickBooks have withstood the test of time, both have demonstrably wide moats. But while that lowers the overall risks to this investment, it doesn't address the bold bets that we believe are the impetus for our investment. Intuit has to continually improve its algorithm because it is going all in on artificial intelligence, AI, to power these bets. Given the head start it has, decades of accounting ledgers and tax returns, it has a comfortable lead on the competition. But it must continue to execute on that lead to capture a greater share of new business. Without that, a competitor's AI offering could eventually outperform Intuit's. Along the way, we want to make sure capital is allocated wisely. Already, it seems clear that the $8 billion price tag for Credit Karma was worth it. But if Goodertzi's team throws good money after bad, we'll be forced to reconsider our thesis. Why Intuit is worth an investment today. Investors should make room in their portfolios for dominant companies in their respective markets that still have high growth profiles. We've already seen Adobe, Nasdaq, ADB, and Microsoft, Nasdaq, MSFT, achieve sustained growth rates we would have thought impossible a generation ago. Intuit is shaping up to join this revered group, and investors who jump on today can reap market-beating returns as a result.